Hi everyone, so welcome to the India market review for 1st Feb. This time it's on a Monday. We didn't have a session last Friday, and well, let's quickly jump into what's been happening in the markets. So one of the questions that the media was talking about last week, as I'm sure some of you might have heard, is that crude oil has gone back up now above $30, and whether and the global stock markets also jumped up across the world by 2-3% in some of the largest equity indices, and whether crude oil has put a bottom in its place right now. Well, uh, I, I don't know, because I think right now crude oil still has a lot of event risk. So that jump, as we know, that happened. So just looking at global factors, uh, was based on the Russian, I think, finance minister or oil minister, I'm not sure, right, saying that they are considering, right? So they, as in they, Russia and Saudi Arabia, are considering 5% cut in production, right? So anyhow, whatever it is, it's beginning to hurt. That's the point. And if just the rumor or one casual comment, sent things shooting up, then we just have to wait and see if there's actually a decision made, what could happen. And I think we just have to, really wait for that. Actually, let me just start off with, so we had that, right? Uh, I'm not sure if any other news came out after that on this. If you're aware of anything, please do share. Uh, and I think this Friday or something is sometime there's an emergency OPEC meeting which has been called for. We'll have to see what happens there. um, in the meantime, on the global front, Bank of Japan has introduced negative interest rates, right? And now this has, well, two things to it. One is renewed worries that the global economy is going into recession again. Uh, and the 2% jump in inflation that had happened in Japan over the last 3 months has actually not been sustainable. Inflation has come back to zero. The Bank of Japan target inflation rate is 2%. It just stayed there for, I think, a few weeks or a month. And BOJ is now, negative interest rates. And really, if you, they started with US in 2008-9. Last year, 2 years back, Draghi with the European Central Bank. They haven't gone to Europe negative interest rates, but they started quantitative easing. Japan has been doing it for 2 years now, but Japan has now gone into negative interest rates. And last year, Switzerland did that with a negative interest rate just out of the blue, right? So the idea basically is it is a penalty to save money, and the you know central bankers want us to actually spend our money. They want the banks to lend money so that people do something productive with it and all that. So, who knows where this is going, but the double-sided sword that negative interest rates is, so one is the renewed worry that the global economy is going into a recession, and now the second largest economy after, or third after US and, well, China, I don't know, I'm sure, Japan is now having to resort to the most desperate fiscal measure of negative interest rate, right? The positive side of that, which happened in 2009-10, is that now you have ultra cheap money in the system, and the hope that the Bank of Japan and other people have is that this is going to spur spending, investment, etc., and that's good for the economy, good for profits, good for corporates, good for employment, all that stuff. But actually, if you look at the markets as we speak, all all that sentiment, positive rub-off has clearly gone away. Nikkei closed nicely, 2% high almost, right, for the day, but nothing else except Australia, S&P, ASX 200, which is in the same time zone or approximately as Nikkei, but whether it is China or Hang Seng or the Straits Times, we close negative, and as we speak, Europe is also 1 to 1.5% down. So nothing healthy here. And actually, if you can, just look at the charts here, then these are not intraday charts. These are like 5-day charts. The intraday charts is the small 1-day chart. You can see that right from 132 when they opened, the markets in Europe have been down, and all of them have been trending down, right? And finally, if you look at the US, well, just before the session, before the IMR started, I was looking at this. Well, at least there are two indices in the green, or at least flat now, 0.04%. So some hope, utilities and transportation, but the broader indices, industrial average and the Dow Jones Composite, all down, though not as much down as Europe is. All the S&P indices are down, and you can see that the volatility index is clearly up. That's typically what happens when markets go down. And if you go to the Nasdaq, that's all down, so except transportation, and as much as 1.5% down, mostly 1% down, 1.5% on biotechnology. And well, NYSE also down. So US, oh, this is down quite a bit actually. Energy sector down 3%. So I'm just wondering commodities. So just let's look at commodities. Just a quick peek to see where crude oil is. And well, crude oil is down 2.5 to 3%. So crude oil is all coming back down. So looks like the correlation that is there between crude and the equity markets right now is very much intact. Crude is down, and so are the global markets. Very interesting that natural gas for March delivery this year is down 6% actually. That's I don't know if that's significant. I don't see this data often, but 2 to 3 to 6% down, and there goes the global market. So in coming to, well, us here in India, as we all know, if we just go to NSE, we had a very, very strong recovery on the markets post expiry. On Friday, there was a handsome 138-point Nifty up move, which I'm sure everybody was quite happy about. And well, two ways to look at it. Today's uh, what slight down move, if anything, right? Uh, just a few points. One can argue that this is a well-deserved rest and a pause in a continuing up move, and added to what adds to that interpretation is clearly the lower volumes today on the up move. So that's clearly a good sign. Now, whether the rest of the world will drag us back down, well, that's something I think we'll just have to wait and watch. Okay. So if we quickly do the NSE review, then uh, uh, maybe I should, remove some of the lines. I think too much clutter. Make it a little cleaner. Okay, hope that helps. All right, and so we've been on a downtrend clearly from March of last year, and lower tops, lower bottoms, and at this point, those lower tops, lower bottoms are actually very much intact, right? There is no reason to believe from a trend perspective that the downtrend is actually over. We have a very much a lower bottom that was established a few days back. Until we actually see, this point where it is actually this red horizontal line, it actually broke out to that, and in a sense we've got that zone as our first resistance zone, and that's where the market went today, and we've got to break out of that. There is a very interesting thing here. There's a gap, as you can see, right? And that gap means the market should go to at least 7721. So right now 7600 acting as a resistance, 7721, and then you've got plenty of these long-term moving averages sitting right on top. So it's definitely going to be a huge effort for the markets to rise. Now, one very interesting thing, as far as not interesting, one thing that we need to follow, right? We'll come to local factors, right? Is the budget, right? In 4 weeks. So how will that impact the market? I think it's still a little early days, but I think clearly by next week we should start seeing some rumors and some expectations, etc., by various industry groups on what could not happen. Clearly, GST is not going to happen unless there is one sort of backdoor deal between the BJP and the Congress. You never know in the world of politics, but if that does happen, then of course, fireworks will fly, markets will just zoom. So that's one clearly, I think. What would I say? Hangovers, right? GST is a big question mark, could just happen anytime. And that's definitely going to be a boost for the markets, sentimental boost, short-term boost, and in the long term, fundamental boost, right? So on the upside, what shall we say, risk, if you want to use that word for upside also, this GST could just happen at any time, right? That's my take on it. Whether it could happen in the budget session, who knows, when they call for it out of the blue, something happens and it gets voted up. So that's one thing to watch out for, and that's an event risk as far as I'm concerned. There's really no way to predict it, in my opinion. You just have to go with it. So from that perspective, one should probably be long. But like I said, we really don't have a uptrend in place. So I think budget is basically the issue. There's really, as far as I know, really nothing else. And okay, let's add this risk also. Higher crude, right? So if crude goes higher, one of the things that will be interesting to see is whether the government of India starts to decrease the excise duty. I don't know how many of us know, but the excise duty on petrol has been increased by 11 rupees per liter in the last 1 year, and it has been increased by 13 rupees on diesel in the last 1 year. Just one second. Okay. So, um, if we have higher crude, then whether excise duty comes down, so we are paying a hell of a lot more for our fuel than we should be actually. And if the government of India is not going to cut down excise duty, then there is petrol prices, fuel prices going up, which I don't think is going to happen. They will have to cut down the excise duty simply because India's growth is really not happening. And there was an article, by the way, in the Hindu, I think 2 days back, or was it today? Mm, Jayalalitha is demanding a rollback of excise duty, saying it's completely unfair that the government of India is, filling up its pockets with that. But agree, if I could do something, I would also, I mean, take the same and make the same demand. All right. So anyhow, if we have higher crude, then what is the government going to do? That's one thing. And oh yeah, I think there's an RBI policy happening sometime, right? Nobody's expected to keep rates unchanged, right? And however, if there is a surprise, there can only be a cut. There is no question of increasing rates, that's for sure. If there is a surprise by Raghuram Rajan, then that is definitely going to be a big plus. I'm not sure when that RBI policy is. If somebody can look up a calendar, that will be great, right? So unexpected cut in rates, right? So who knows? inflation is well below. Thanks, Madhu. So RBI policy tomorrow. So around 12 o'clock, we will know, right? Uh, and that's possibly the reason why the markets really didn't go much anywhere today. Is saying wait and watch and let's see what the RBI does. So these are the things, and I think on the balance, there are two positive event surprises that can happen. One is GST, one is the unexpected rate cut. And if any one happens, then the markets could, at least in the short term, fire up. But all said and done, otherwise, I don't think there's really any good news. None of the results have been spectacularly good. L&T's results came out, and they've just cut a really sorry figure. uh, L&T has constantly revised guidance down in the last 3 quarters, and this is not getting better at all. So if L&T, a sort of proxy for India's capital goods and infrastructure development story, is not able to, grow, I think it says a lot about what's happening in the country. All right, so a lot of good noise, but nothing really happening. So let's see if the budget has any great surprises. Jaitley has said that reforms are required in order to beat the headwinds and the slow growth that is happening. Of course, all this Make in India, Modi euphoria is all gone. And if they take some real strong measures, reforms, then yes. Otherwise, if the budget is a letdown, then we will probably be, going down. So I think the markets coming to that, uh, wait and watch approach for till budget, right? Unless some event happens. That's, I think, the overall expectation one should have for February, right? So of course there will always be some stock specific uh, what news, and some stocks that are going to really really uh, fly. But other than that, I think overall the Nifty, especially probably the bank Nifty and all, should just stay where they are, give or take 100 200 points. They said that's it. So I'm not sure about a trend happening right now, right? Okay. I just want to sort of maybe introduce a spanner in the whole discussion, which is, I said everything what I did about the Nifty, but there's a, well, I would say a new line of analysis that I want to introduce now. And I'm not going to go into detail, but Elliott wave, right? So been doing quite a bit of background work on it. Been actually been having webinars with somebody in London now who is Elliott wave expert, and I can't say much more than that right now, but hopefully we're going to do a lot more of that in maybe a month from now. But I'm just introducing what I have come to know, and it's really a fascinating revelation. So here's just what I will say, and I will leave it at that, which is that the 7,200 could perhaps be a bottom for quite some time to come. And when I say quite some time to come, we're talking about at least maybe 3 to 6 months. And the reason is that this could be a retracement wave, according to Elliott theory, which is now complete. And we could now be looking at meaningful up move. It's too early to say that we're going to get a strong uptrend, but we could be looking at a meaningful up move in the next 6 months at least. Right now, I'm really sticking my neck out on this. More details will follow as we do the further IMRs. But the reason I'm saying this is because we we just mentioned about the negatives and the downsides on the global side and the local side, whether it's crude oil, whether it is negative inflation, negative interest rates, the fear of global recession. Of course, the US is apparently doing well, and the US Fed did not raise interest rates, right? So that's something else to note on the global side. Uh, and India neither is growing well. So having said all that, Elliott wave is bullish, right? And well, I think it takes really a lot of time to rewire one's head and think in a completely different dynamic or with a very different context, which is what Elliott wave basically requires. But one of the things that really fits in well with that Elliott wave idea. So, right now what's happening for me is that as I'm learning some new stuff and really incredible stuff, it's just natural to want to integrate the new stuff with what one already uses, the old things which one is comfortable with, which what one has kept using for many years now. And one of the things that I want to just add to that up move scenario is the GST and budget, maybe reform. Let me add that. So the budget, GST, and RBI, right? Whether all of these things are positive triggers for the market, which fits in very nicely with the Elliott wave view that we are probably now in a up move, right? So just putting that out as a thought for or not as a thought actually, but as a point to keep at the back of our minds going forward. So if the Nifty is not going to fall below 7,200 now, then well, that's really a fantastic news, and one should be loading up on one's portfolio. Having said that, let's just want to hasten to add that it's not like the down move is permanently over. Elliott wave does say that after this up move we could get a bigger down move, but we will talk about that probably many months down the line, right? Okay, so I just want to reiterate one more point which I have said in the last few sessions, which is one thing that has not happened so far, something that I believe will happen at some point, is this level of 6,300 has not been tested, and I've said this in the first IMR of this year. Not that such tests will happen in a day or two or even in a month or two, but let's consider an alternative scenario, which is if this downtrend were to continue, the one which is there, right? And unfortunately, we don't have this extend right thing in AMI broker. At least I don't know about it. There is another line I have to use, I think. Right. Okay. So if we do that, and now how do I introduce time here? How do I drag this? Oops, there's something about margin. Okay. Sorry. All right. Let me not waste time right now. So I think if one were to just go down with this level, 6,800 should happen. So 8,003 to 7,003. Let's say 1, 2, 3, 4 months. Uh, Another 4 or 5 months, right? According to this, right? Now I know I'm giving two contrary views here. I'm just saying if this downtrend happens, another 4, 5, maybe 3 or 2 months, if the budget is horrible, let's say, or some global event happens, is when 6,3 could happen. The contrary view is that according to Elliott waves, the 7,250, etc., is an important bottom and is unlikely to break. Now, having said that, one very important thing to add, to clarify, to connect all these conflicting views is if at any time in the future this level is broken, and I would request you to sort of make a note of this somewhere in your mind, in your books, in your alert systems of let's get absolutely specific now, right? This low of 7241.5, right? If 7240 gets broken, then very likely we will go much lower. As long as this 7241 is not violated on the downside, we are okay and we should go on the upside, right? And if that's again according to Elliott wave. There will be bumps, of course, especially because there are all these long-term moving averages on top, offering resistance and so many other resistances on top. So don't expect it to be a smooth up move. definitely a bumpy ride. Okay, all right. Why is like this? Okay, so just to look at indicator studies, some of the popular ones, of course. Indicator wise, things are actually looking positive. MACD, lagging indicator, positive crossover, and histogram is now diverging on the plus side. So that's definitely good, and that should give some, what shall I say, tailwind support or push from the back to maybe help the market keep going up. The RSI is still below 50, right? That's at 48.57. It's okay. It's a 15-day RSI. A higher number would be comfortable. Maybe that will happen in by the end of the week or something. Let's see, right? So indicators wise, I would say really not much to add. I wanted to look at where is that? There was another study I had, seems to have vanished. Oops. Okay. It's gone. All right, doesn't matter. All right, some volume studies I had wanted to start off. That's okay. All right. So that's on the Nifty. So basically, upside potential is clearly there. The levels to look out for are right now 7,600. If 7,600 breaks, then 77 and then 7,830. Clearly there, but all these multiple resistances which are there is what we will have to look out for. Sometime later in the month, I'm just thinking about some option trades. When will expiry be? Expiry will be on 25th of Thursday, and so we're looking at March. All right, so 25th, this month's expiry, something like writing the 7,900, 8,000 call may actually be a good idea, right? And also, if one feels that the 7,200, if one is by the way, if you're not a follower of Elliott Wave, I would definitely recommend now start reading up a little bit about it. We're going to definitely do some programs, but as we introduce it into the IMR, it would be nice if you got comfortable with the jargon and the concepts of it. So coming back to options, writing the 7,900 or 8,000 call, also writing the 7,200, 7,300 put may be a good idea for the coming month, right? You could think about those as levels since the budget is going to be after the expiry of February. All right, so having said that, let's jump into our relative chart. You should be familiar with this by now, I hope, right? So I'm just looking at from say September, no particular reason, just I was like playing around with this before the session to see if I could get any better clarity, but really nothing much. So I'm just going to take, oops, it's going back. I haven't still gotten used to this. Okay, so one thing which is very clearly there, I hope you can see this light gray line on top. So this is consumer durables, all right? So the consumer durable space is the one which is, actually doing quite well. The second thing to note is this line here. It's sort of, I don't know what color this is described as, cyan or something like that, right? So which is mine. So that one is the healthcare sector, which seems to have moved up nicely. So I'm looking basically for some that moved up nicely. So that's healthcare. Then we have what is this here? One second. Yeah, minus 16. That's metal, which has moved up. And at the bottom here is capital goods, which seems to have like bottomed out over the last 3 weeks, right? Not sure whether, I'm not saying one should buy this, but what I'm looking at relative performance, capital goods seems to have bottomed out. If you remember when we did this about 4 weeks, 5 weeks back, we talked about metals perhaps doing that, and you can see that the metals have gone from say -24 to -16. So clearly a nice 6% up move. Healthcare has done that now, and we also have consumer durables. Fortunately, we don't look at consumer durables too much. I need to create a watch list for that. So hopefully should be there. So those are the sectors to basically, I think, watch out for. So again, just to repeat, capital goods, consumer durables, and healthcare. Right? That's as of now. IT is also seems to be doing well, but I think a lot of events ahead, budget, all that stuff. So the sector thing could change quite quickly. All right. So with that, let's look at. Oops, this, I don't know why this happens. 1 second. Okay, so this is BSC Auto, and clearly what's happening with auto is that it is sort of got a higher bottom. The auto thing, I think the budget will be keenly looked at. There are these things about Euro 6 being implemented early. It may not be announced in the in the budget, but you never know. There's also the Auto Expo going on, which is once in 2 years. It's happening in Delhi right now. It's going to start, I think, sometime this week, I think, right? But yeah, so autos trying to clearly go up, nice green candles, so that's healthy. Consumer durables, right? So that's what we were saying. Wow, this is really impressive. So consumer durables are close to their life high. I'm wondering how many other indices are like that. We should definitely be looking at that. Wish I had that watch list ready. Unfortunately, it isn't. Okay. Uh, and yeah, okay. Then capital goods. So you can see here that's the reason why we have this uh, what bottoms that we saw, triple bottom type situation that we saw in the relative chart. So capital goods seems to have bottomed out there somewhere at the 12,000 level. Way too early to say, because like you can notice that it's sort of range bound. This could be a flag, of course, right? That could take the capital good index further down by another 2,000 points. So let's see for what happens there. FMCG, wow. Okay, so this has definitely done well and bounced nicely. Uh, Healthcare, I already mentioned, bounced very nicely, and it's just at the complex of the moving averages move through that, then we could see further up moves. So maybe the down moves in pharma are over, and nice up moves are on the way. IT will do from CNX metals. All right, so here's something to keep in mind as far as the metal index is concerned, right? So we've got this multi-year downtrend from 2014, one coming down, and you've got this sideways move which has lasted well a good 6-8 months, and this could really be a sideways consolidation move. Please go back and revise your Doe theory. This could be the channel at the bottom of a bear trend, and the breakout of this resistance line here, whenever that happens, could be the indication of a clear new bull market on the metal index. Right now, too early to say, and whether this is a false breakdown or not is, I think, something we basically need to wait and uh, wait for the answer, right? So I'm just going to put that false breakdown. Okay, we'll see. I'll just put it that. All right. So right now metals fundamentally are probably just looking completely pathetic, but who knows? Let's see what happens. So it'll be definitely an interesting space to watch. Right now, the big issue with metals will be, of course, so many of the long-term moving averages still in a very, very determined downtrend, I would say. So if anybody's getting into metals, you're doing it at significant risk, but if it pays off, you probably could make a huge amount of money for, you know, the space just rallying. Okay, the power index, well, that's also, you know, bottomed out and gone sideways for well over 6 months. This is looking even more interesting because are we looking at a bottom here? We, well, okay, the power index is actually not that long. It's only from 2012. But even then it's down about 50% or almost was down 50% and then seems to have bottomed out. But I would still say it is early days. So power, any reforms that might happen on the power side during the budget, that's another thing that you may want to keep a sharp eye for. Realty, okay, that's again something in the budget. I think we would see realty has really been stressed as we clearly, uh, you know, is visible here. And the multi-year lows 2013, 2014, 2015, 2016. Now this is like a quadruple low in my opinion, and that's extremely rare. And I have to say that in retrospect, this could be, we could be seeing, maybe 6 months, 1 year later, we would say that we saw the worst of reality sort of getting over, and quite possible that this has been a recurrent theme. Those of you regular IMRs, I know you've heard me say this before, of maybe we are seeing a bottom in reality. And right now, the what shall I say? That line of thought is definitely playing out, and the charts are supporting that view at this point, right? So, oops, forgot to add all that here. So let me add that reality and metals indices. Point of view. Okay, so that is to make it very clear, are we seeing the channel formation of the last segment of the bear trend, right? So this is something to, I think, really track. All right, great. Oh yeah, the other thing was also VSC capital, sorry, consumer durables, yeah, lifetime highs. Price to study. Okay. All right. So that, and then NSC, basically want to look at, let's look at Nifty Junior also. Okay. So that's probably done better than the Nifty. And even if you look at today's candle, just today's candle, long lower shadow, which the Nifty didn't have. It had more of a good body, indicating both, of course, bulls and bears fighting, but the bulls seem to have won the space on the mid cap space. So maybe the mid cap space is where we should be actually be focusing on, right? All right, Bank Nifty, the bank's not doing really well, but you know what? I think with tomorrow's RBI event down, very much there, we should just leave the banks thing at this point. So banks could be a great buy, but for now, maybe we'll just ignore that. What I am wondering right now is, just like I spoke about the Elliott wave move down over for Nifty, whether this would also qualify for an Elliott wave move down, which is over for Bank Nifty, and then the banks are going to keep going up. I'll get back to that. I'll answer that question hopefully next week, irrespective of what happens on the RBI policy tomorrow. And then CNX IT, well. So that has clearly done well. Not very far from its lifetime high. This level of 10,600, 700 has become, I think, far more important now. And it has broken out. The other important thing is that it's clearly broken out of these long-term moving averages. So in terms of relative performance, CNX IT very bullish, right? Well above the long-term MAs. Oops, don't want corrections. All right. And then we can look at, yeah, that's it basically. Pharma, more or less like healthcare, again, very close to moving averages. So that's good. And that's it. Let's look at some broader indices. CNX 500. All right, this is interesting. Why I'm saying this is interesting is because this is the broad market. Clearly, I haven't seen this chart for a very long time. And I'm just wondering whether this has actually not gone down so much. So from about 7,450, it's gone to 6,000. That's 1,000 points. That's about okay. But the in Nifty went from 9,000 to 7,000, right? So this is clearly an outperformer. Looks like, okay, so here's something really uh, cool and nice. The Nifty fell from 9.1 to 7.2. So just to keep it simple, 2,000 points in about a year and a half. But the CNX 500 has fallen from 7.4 to 6.1, 1,000 points in a year, the same time period. Clearly, the broad market is performing better than the Nifty is, right? So we've got a divergence here where the broad market is doing definitely better than the large conglomerates of India are. Now, it's difficult, I think, at this point to say that is this are the large companies in India, of course, they're going to be hit by the larger factors, the GDP slowdown, the global forces and all. Are they setting the trend for what the rest of the market will do? Or is that a temporary blimp and the rest of the market is now going to push or support the Nifty stocks to do well? And if you go back to the Elliott wave discussion, then you can turn it off that way of saying that the overall market seems to be healthier. It's just the corrective phase of the market on the Nifty that's over, and maybe the overall economy is perhaps not that bad. Well, you can twist it any way you want. So that's one problem with the markets. Obviously, we'd love it to be clearer, but that's one way of looking at it. But this is clearly, I think, important, and still far away from the moving averages, but seems quite nice to me. And the Marubozu, you know, uh, green candles. Once this is above 6,700, then I think the broader markets are definitely going to be on a roll. By the time Nifty will also be definitely a few hundred points higher. So that's interesting. Okay, okay. So done. Yeah. This is the CNX 500, basically the same story, I would say. Sorry, CNX 100. So here's okay. This is interesting again. What data are we looking at here? How come the CNX 100 looks okay? Let me just skip on this because it's looking like a nifty chart with a different name. Okay, I need to get back to you on this. All right. All right. So overall, what's the view? We actually have quite a few of the sector indices quite bullish. Consumer durable being the most. IT also looking good, and then realty and metal I think are the place where those of us who like underdog stocks should be looking. And apart from that, of course, FMCG was fine and all that, but I think these are the ones which stand out in my opinion, right? Okay, so just thinking what best we should do. Okay, so let's do that actually. Let's do the stocks within the BSE consumer durable stuff and see if you know you'll probably find some pleasant surprises on that. Okay, so yikes. All right, so like I was saying, the consumer durable space has performed exceptionally well and continues to perform exceptionally well. And for whatever reason it is doing that, that's where the strength definitely is. And if this continues, or actually this is where we should be looking, and we want to now therefore look at the consumer durable stocks. So we're going to start with, let me just get rid of that. Yep. Rajesh Exports, right? Uh, all right. So there is Rajesh Exports on your screen. That's the entire chart in all time frames. And this is okay. This is really looking impressive. There's absolutely no doubt about it. But I'm just wondering, this is quite scary, actually. Okay. And why am I saying that? Because that's at a life high, but the way it is going up on the life high, if you notice, the volumes have, just dramatically just, come down, which is definitely not a good sign, I would say. And if it is going up on dramatically low volumes, then this is potentially setting itself up for a major fall. I think those of us who are in the, look at this daily chart, the volumes have really, really come down. 750 rupees, it seems to be really very thin candles, a lot of shadows over the last, for the whole of this December to Jan right now. And this is just ripe to crash if the, um, if the event happens like for some reason, I don't know. This is not a stock to be buying. That I can definitely say. As a matter of fact, if one has the stock, one should actually be thinking of going light on it right now. The risks are definitely too high, right? Um, there's still nothing in the indicators. They're actually showing, I would say, strength, right? But somehow this is not looking healthy according to me. And if it goes below 670, one could really definitely get out of the longs and consider even shorting it. Okay, all right. Okay, Whirlpool. Whoa, what happened today? Just let me check. Yep, some results came out or what? This is just a, such a massive up move. and on possibly all right, so this is interesting. I didn't actually observe this. I wasn't even looking at it. It's come to exactly that resistance level, plus that's where all the long-term moving averages are, which is just taken out. I'm suspecting some news, some results, some quarterly result has come out or something like that, and that's why it's done well. And I would stick my neck out and just say one thing: any correction, if it corrects even half of this, or it may not correct half, maybe even around 630, 625, just pick it up. Because if this once this crosses 670, and I think it's just a matter of time at this point, then we could clearly be seeing much higher. 700, 760 is easily on the cards, and I would definitely be putting this on my watch list now for a good short-term trade. I don't think this is in the FNO side, right? So this is all spot trades, but definitely worth it and could pay off quite well. We're talking about even if it comes to these levels, 760 from where it is right now, we're talking about a clear 10% up move. So some correction maybe tomorrow, uh, and then just pick it up, right? So this will be a really good one. Okay, so Whirlpool, then next is Titan. Okay, so this is also shot up yesterday. Today, some sort of a correction, and as you can see, it's like a tweezer stop and came to the already placed resistance zone, and then has really, moved up. And I would think that this is ready to move up again. Uh, I'm sure all of us have noticed perhaps their new ad campaign on their smartwatch. Quite a nice campaign, and nothing more than that as far as I know. In terms of Titan's business, not sure if, by the way, quarterly result risk is still there, and this could, yeah, above 370. This is definitely a buy, and Titan is a buy on correction. Around 350 is 350, 352 would be definitely be a very, very good buy on Titan. All right. Next is Rajesh Electric. Oops. Sorry. What am I looking at? Need to get new glasses. Yeah, Bajaj Electric. Okay, quite a big downtrend. So the stock, let's see, weekly. Wow, 2011 to 2016, this stock has really not done much, has it? It's like extremely sideways. All right. These are somehow sometimes stocks that I think I have a preference for. Um, you know, it's like really long consolidation. It's like Reliance, years of consolidation, and then one fine day they're just going to very strongly surprise with a big move. And if you're not watching it, you'll just completely miss it. Great to have a watch list of stocks like that. And let's put that's the other support that. All right. So, oops. I don't think Bajaj Electricals at this point is going to break this level, right? And if it does come down to those levels, one should actually think about buying it. Okay, let me. Oops, 1 second. All clear. I want this also on the. Let's see if it comes. Yep, thank you. All right. Okay. So Bajaj Electricals. All right. Definitely, maybe a little early to buy. I think above 190 would definitely be a better place, but could also be, you know, in a potential tentative uptrend that we are looking at. Just keep it on your watch list. I think too early to say. And if the results are out, that's okay. But if the results are not, then it's better to wait for that. Okay, don't want to spend too much time on this. Then Hitachi Home. All right. Whoa. See how it came to 1000 psychological mark and just took off from there. Tweezers bottom 1000 rupees. Only thing, not going up on good volumes, but then in 2 weeks it's gone up 20-25% from 1000 rupees. This is just a pure technical trade in retrospect. If you had the courage and the guts, you would have just taken it. uh, of course, this is all in retrospect. 3 4 and this is so Hitachi, by the way. I don't know if you've, by the way, noticed the new advertisements on TV by Toshiba. They are advertising, weather radars. They are advertising industrial water purification, all the big, capital intensive stuff. And that's really interesting. I mean, it just got my interest because I'm wondering what these guys are up to, because is it that just setting the stage, letting people know about what their industrial side is, capital goods, heavy industry side is, in the hope that the budget or the government of India is going to do some massive announcements, and they are sort of at least known amongst the public, amongst the media, amongst the politicians. You can't reach out to all of them, that we are here, so who knows. Okay, 26th, 27th. Right. Okay. So academic thing. Here's a nice gap, right? Which was, as you can see, promptly filled about a month later, November, December, mid-December. How it filled that gap there. Actually, didn't go through that. That's a textbook gap filling, but there's no usually expected to follow through. It did not. It just came back down. Right. Okay. So anyhow. Hitachi, I think in terms of maybe, I'm not sure what they do in India, but a correction would be better place to buy, or when it goes above 1,350. Right now, looking a little, risky, low volumes, but on a correction around 1150, 1100, who knows? Definitely pick it up. Okay, PC Jeweler. Wow. So this has jumped up 350 to 420, going sideways, 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 sideways. All right. Now, wondering whether you had a triangle which has broken down, and then what happened? It obviously did not go to its measuring implications. Some bulk block deal here, and then broke down, but seems like a false breakdown right now, and seems to be heading back up and at a life high, or close to its life high, and on its way to probably make you know higher levels, especially if it can take this level out which I've just put now. Then this is definitely going higher. Once it takes out 440, 500 is 480 at least is most certainly on the cards, right? I'm just trying to figure out why jewelry companies are doing well, but you know what? We should never ask those questions if you're doing technical analysis. Okay, so this would be on the buy list. Rajesh Expo was on the buy list. Titan was on the buy list. Bajaj was not. And then we've got Videocon Industries. Okay, big time. What the hell is going on here? Sorry about the language, but this is a crazy chart. Not even sure I should be looking at it. Well, the data seems okay, but the way this, look at this, in about 2 months, it went from 20 bucks to 220 rupees. Phew, ऐसा भी होता है. What else can we say? Right, 2009, 11. Okay, it just come down so gradually, but deceptive. It was 500 rupees in 2008, and it is still going down. It's close to 100. Do these guys still make? Yeah, they make TVs, but you never see them anywhere. So I wonder what they're doing. DTH is there, but I don't know if it's part of this group or not. You know what? I would just say forget Videocon right now. If I don't think any of us have it, but if you have it, you should sell it on a bounce. And on the other hand, if it goes back to 100, might get a lot of psychological support, but clearly it's falling on volumes, and you can see very small volumes right at the bottom when it's trying to go up. So leave that. Can't anyhow short this, so it's okay. No point talking about lower levels to short. All right, TTK Prestige. Okay, so that's gone completely sideways. And what a move from 1000 to 4400 in 9, 10, 11. And this is just, that was just a complete re-rating of the company. It was below the radar, nobody knew about it, or rather, nobody had taken it seriously. And then all the FIs started to fall in love with it, and you saw what happened, right? So, of course, the company started to do branding and their uh, brand shops, and then it's no looking back. Okay, so we had a massive move, and you can see that on the left side of the screen, huge volumes, but those volumes have clearly come down very significantly. But can't rule out that this wants to is itching to go higher, right? uh, Overall, I would say the green candles have good volumes and the red candles have not so good volumes. Actually, we had that volume analysis. Yes, so this is what I was looking for. So we have PVT and OBV indicators at the bottom, and though they're not looking anything, they're at least looking bullish or neutral. So volume is clearly in support of the stock going up, and one could consider this 5,000 definitely. And I think the high here, let's see, 4925, and the high here 4832. Okay, 5,000 might hold some psychological level, and there might be a lot of talk about it in the, not might, there probably will be a lot of talk about it in the media, I think. And this is like Kumbhakarna stock. Once it gets taken out, then who knows? It's when I say Kumbhakarna. Okay, I don't like that color. Sorry. We put that. All right. Is because it was sleeping for many years and then just got up and then went up 40 times. Massive. Wow. And then went to sleep again from 2012 to now, 4 years of sleeping, and might be getting up again, right? So watch out. One of the things, just out of curiosity, one might like to do is to see if Prestige, TTK Prestige has gotten into any new product lines to leverage their brand, their outlets, their recall and all. And of course, Abhishek Bachchan and Aishwarya Rai are brand ambassadors for them. Hope you saw the ad, right? Okay, so that was on a weekly chart. Done, right? Okay. Mm, you'll have to wait, but I mean, you'll have to be patient rather. But I definitely think this is headed higher. All right. Okay. Didn't notice. So in 2014, we had a correction clearly from 4,800 to 3,000, and now it has gone from 3,000 lows to 4,000 to almost 5,000, corrected again, and then likely to go up. Okay. And then lastly, in the consumer durables, which is part of the index, I'm sure there are lots more. It'll be Blue Star. All right, so Blue Star. Hmm. Wondering whether, okay, so this is like a triple top, by the way, right? Not like it is. And Blue Star has clearly not been able to break out of its 2008 highs uh, till date. And so 500 is a target I think it would be seeking to achieve sometime, perhaps this year. All right. But oops, what did I do? Hmm, did something. Talking about summer coming, ACs and all that stuff, and if that picks up, then Blue Star could really rise, right? And okay. Consolidating clearly, and what you can clearly see on Blue Star, except at the end, and this is today's. Okay, something happened today. Uh, Massive volumes. You can see very clearly whenever it shot up from 330 to 380 in July, August last year, huge volumes. Comes back to 330, massive volumes. Comes back to 330, one day goes from 330 to 370. Gets sold at 380, comes back again, comes back to shot down to 330 and even 320. Next day gets bought on fantastic volumes, again gets shot down. Some massive, I don't know what ghapla happening here or what. And again today, very suspicious. So you can't, I can't make head or tail of this, volume business and all. Uh, but one thing seems to be that 330 is a place of accumulation. 390 is definitely a place of distribution right now, and that's been going on for several months. It's just a question of time. It breaks through 400. You should actually put an alert for that, or an alert for 320 or 330. And after that, I think it's almost one-way road to 490, 500. That's what I think I would do as far as Blue Star is concerned. All right. Okay, so we've come to the end of the consumer durables list in the BSE index. There's one more I forgot. I missed it. Symphony. Okay, let's look at Symphony. And went from 200 to 2000. What are we doing? Wow, 200 rupees stock in end of October 2013. Okay. I was thinking last year. Okay, that's I can forgive. 14, 15 in 1 year goes to 2000 rupees. This is like TTK Prestige having been rediscovered, and this is just impressive, absolutely impressive. Okay. Phew. Okay. When you think about this, well, I think till 2,500, one just better stay away from this, and then after that, we will review. And if it comes to 1,800, that would be definitely a good place to consider buying, review it, and all that. All right, just okay. So that's it. Okay, I just want to quickly go through, realty and metals. So let's do those spaces. Okay, realty, which are the stocks? So we'll take realty next. Delta Corp is the first one. Okay. Oh, okay. So this is from 2009 onward. 2000. This hasn't really fallen, hasn't has it? This is really impressive because something like DLF, etc., has really done badly, and this one has not. In terms of relative strength, this is doing exceptionally well, no doubt about it. A lot of consolidation in 2014, 2015, and if this consolidation phase gets over, then definitely some triggers possible for the stock. All right. Okay, this is definitely worth watching, in my opinion. 68, 70, definitely a good place to think about getting in. Even now, maybe on a correction to 70, 72, 80, 77 to 80 will be important resistance. And then after that, it is just, and once it clears 90, just shooting off to 120. All right, this is quite happy to have seen this today. All right, so that is Delta Corp. Next is DLF. So we were talking about, so the Realty Index is basically, DLF in disguise, because such has such a tremendous weightage. But having said that, clearly, so they tried all those things about DLF and Rajiv Gandhi, sorry, Rahul Gandhi and all that, and when BJP came, and the stock came to 100, and really didn't do anything after that. Has come to a new life low, of course, right? And but promptly bounced from that psychological 90 mark, but going up on low volumes now. The thing you can't rule out is that, is this a flag? Is this a flag on DLF which takes DLF actually lower? So I would say that if you're looking at uh, a potential shorting trade, if markets were to correct, then it would definitely be DLF, and really no question of buying it. It's going up on pretty low volumes. You don't want to be getting in. Next, Godrej Properties. Okay, so that's hmm, I think I would skip this for now. It's at that 200-day moving average. Not sure what it's going to do. Let it decide. Okay, HDIL. Okay. Hmm. Very interestingly poised, I would say. It is going showing higher bottoms, not necessarily showing higher tops, right? And the question is whether we are going to, not really a what triangle either. Uh, I definitely watch it, and if it can grow above 90 on good volumes, I would consider buying it. And I put an alert at around 65 if it comes there, whether to think about picking it up. So that's on HDIL. Once it clears 80, by the way, I think 100 should be an easy game for it. Right? Especially, like I said, if there's something in the budget or something for this space, then never know. Hmm. Okay, IB real estate. All right, this fluctuating a lot. I would and has gone up on lower volumes in the last few days. Could easily come back. Leave that. Oberoi, Oberoi Realty. Same thing like the other stuff. Going up on low volumes, going down on big volumes. Oberoi, if it can be shorted, I don't think it's not in the FNO. It would be a good stock to short, I think. Again, 2011 to now, nothing great. Uh, Phoenix. Oops, what happened to my chart here? Okay, some open price is missing in this. Okay, I'll need to do an adjustment. I'll do it later. But I can definitely tell you that Phoenix is also doing exactly what the rest of the Oberoi and IB real estate was doing, going up on low volumes. You want to avoid that. And then we've got Prestige. Okay, some news today, I'm guessing, big volumes, but overall again on low volume. So 280 rupee stock is now a 180 rupee stock. Oh, there was some news in case you saw it about Sunil Mantri, which is the Bombay-based group, which is not the same thing I think as the Bangalore-based group, which is Sushil Mantri, right? And them, what do you say? Uh, Having some defaulted some 200 crore payment or something like that. So I'm not sure that that is something which is just unique to one real estate company or other real estate companies are also having problems on that front. We just wait and watch. Okay, so again, Shobha Prestige, I think stay away. And then Shobha, okay, but really, I think very much the picture of everybody else going up and low. This is okay, but no compulsion, so I leave it. Unitech, leave it. Okay, so what's worth going through in this is that there's no compelling buy at all. If anything, there were shorts. So whatever strength we were seeing in the index is not showing up decisively on any one of the constituent stocks either. So DLF being the main heavyweight there. So what we said earlier in the session about reality looking nice, I think we withdraw. Not I think we definitely withdraw that statement and wait for lower levels at which point it may be a place to buy. So that. And the other one we had mentioned was metals. So I'd like to look at that and close the session for today after that. So let's look at the metal space and see if there's anything in the metal space. So alphabetically, Bhushan Steel. What is this? Something wrong with my chart or? Was there some corporate action or massively bad result? It went from 200 to 37. Some demerger, merger. Okay, let me skip on that because oh, this one was taken over or something like that. I'm not sure. Okay, I'm going to skip this. Coal India is in the metal thing, so I'm going to just there. It's there, so I'm going to look at it and massive up move today. No, 280, and today has actually it's gone up even more, and that's definitely a big plus. So Coal India, is that a stock to buy now? I think that's the question to ask. The volumes today are last few days actually really good out of the blue, and you had this nice strong harami pattern here, and then it's just shot up from 285, 290 to 330 without a break. Any correction to 300, 310, 315 should be definitely be used to enter on the long side, target 340, 345, and once that goes definitely much higher. Okay, Hindalco, we had spoken about this double bottom, definitely holding for now. Somebody who is willing to take the risk. When will it go back to 240? God only knows. Let's forget about that for now. But potentially maybe a low risk reward trade here. Stop loss should be below this low, right? And that is 66.35. So say 59.80 or something. And if it goes up, 75 would be the first place to sell. And then the next one will be around 80. No hurry. You could stay away from it. But what's good is this double bottom has not been broken. Okay. Then the sawmills, right? So Jindal sawmills, okay, definitely not looking good. The fell down on lower volumes. I would say just leave it for now. If this low holds, which could be holding as far as the chart till date is concerned, then yes, but big volumes today, some news, just stay away. Okay, then Jindal Steel. So Jindal Sawmills and Jindal Steel both fell together, very similar charts, and I think just stay away from both. Next is JSW Steel. All right, so had gone up on good volumes here in this place, then corrected again with good volumes. Came out with some fantastically bad results. Some 900 crore loss. There was an expectation of some 200 crore loss at best or something like that. Some things in US and Europe, impairment charges and all, and didn't actually go down so much. That was definitely a surprise. The thing is that this is well below, sorry, below this are long-term moving averages. So very different from the many other metal stocks that we have seen. Actually looking, bullish and not very far from its life high. So it's still got an uptrend very much intact and all that. If you look at it in a weekly chart, then you can nicely see a sort of saucer or a bottom being formed there, except that the picture is not really characteristic on the volume side, right? And could be looking at 1200, but right now looks like a bit of a stretch right now. But what is surprising about JSW is the uh, what do I say? The bullishness in it, which is not there on many of the metal stocks, or at least none that we have seen so far. Let's look at a few more. So as far as JSW is concerned, maybe around 1000 or 1020 could be a good buying opportunity. At right now, too early to say. What's good in the long term is, all the long-term moving averages have bottomed out, cupped out, and are now facing ups, which could provide a lot of support. So if you're looking for something on this metal side, then this is one on the long side. National Aluminium, well, forget it. Look at that. Could actually be a pennant formation. Right, there you go. Could actually be a pennant formation and might actually fall down further. So we'll wait and watch. And if that happens, then we are looking at potentially from 39 to 34, or another 5 rupees to 29 rupees as a place where Nalco could go. Then NMDC, right there. Not sure, Madhu. I don't know if you were there in the mentorship discussion with of NMDC, and clearly it was looking quite bad. And well, it took its time, but it did crash from 90 to 75, and one had shorted it, one would have made money. Good fundamental review we did, and Balki was there, and could perhaps be going down even further. Okay, all right, so that's definitely not a buy at this point, and possibly looking at lower levels. Then Orissa mine, looking some strength. Wow, 8,000 rupees stock. You never knew Orissa mine was 8,000 rupees ever. Okay, so that is a double bottom, life low so far. Can't say that it will not go lower, but this is definitely of interest. We have a very, very long term downtrend, and a very tentative up move at this point, but volumes are hinting at support. Could it go back to these levels, which is at around 1860? I would say risky. Stay away. Okay. Sale. So, Steel Authority of India, again, typical, all these are looking like bounces, flags, or pennants, a lot of them, and suggesting lower downsides are quite possible. Okay, Tata Steel, same pattern, same pattern. So here's the way to play something like this, right? Track them all on a watch list, real time if you want to or can, and watch for what happens to these flag or parents. So, not all of them will break out or break down together, but one will. So you need to like maybe put the charts up there, or look at them every day, end of day, or do a live, or do alerts or whatever. And if one by one they start, say, breaking down, then short the ones which have perhaps not yet broken down, and look for opportunities. Or if you can be quick on the trigger, then do that also. Okay. Oh, sorry, this is Tata Sponge. What happened to Tata Steel? Ah, sorry, that was Tata Sponge. Tata Steel. Wow. Okay, this is interesting because Tata Steel. The long-term moving averages are flattening out, especially now lastly the 200-day moving average, both the 50 and the 100-day has you know turned, and this could be the start of a longer term uh, turn. And we'll it's like obviously too early to say, but if that is the case, then it has hit bottom at 230. It's not going to run off, but it's getting plenty of support at 245, 250 levels. Moving average is sitting right there. It's going to face a lot of resistance at 270, 275. But this is a low risk trade if anybody is looking at that. Not an investment, a trade. Go long now with a stop loss around 245, 244. First target 260, last next one 270. VEDL, so that's Vedanta, isn't it? Okay, that's at let's come back to the 2009 low, and if that breaks, who knows? It could become a wow. Look at this. It was a 1 rupee stock. Okay, so 70 rupees goes to 1 rupee. Can you believe that? Okay, that's anyhow not happening right now, but you never know. Uh, China collapses or something, um, and the world does go into recession. Yeah, this could go much lower. I mean, the downside is so strong, but it looks like there's some accumulation happening here. Look at the volumes. All right, some accumulation seems to be happening here. Trying to see if there's anything on the indicators, tentatively, but not yet. So I will skip on that. Okay, and well, Corp. Okay, looks like something happened today. A lot of volume ran off nicely from 80 to 100. Broke through all the long-term moving averages today and then has corrected. That's like a nice shooting star, but could be something to buy, but only after a correction. So on metals, we didn't really find anything except Coal India, Jindal Saw, and Tata Steel, right? And maybe Wellcop, right? So some of the big ones, like definitely JSW, not Jindal, sorry, JSW Steel and Tata Steel and Coal India were the only ones which showed strength. Everything else is showing some weakness. Wellcop also. So at least 3, 4 out of about 12. Let me just count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 15. Uh, Early strength, but the strength is definitely also in the biggies of the game. Could be a bottoming out process going on here. Just tentative. Would like to see more strength, but like I said, if anybody is looking at some underdog stocks, then these are definitely some I think worth looking at. Right? Okay. So great. So I'm going to wind up the session today. Just to quickly wrap up, consumer durables, those are the places definitely to be looking at right now. We look at IT at some other session. And realty and metal, realty clearly a disappointment. We're talking about bottoming it out, but nothing there right now. Metal, some, yes, JSW, Tata Steel and all, Wellcop, but others still need to catch up. And so we are still in very early days. I would say we just need to wait and watch. If you're looking at and itching to get in, then the consumer durable space is definitely the place to go. And just to retrade. I think it was uh, PC Jewelers, Titan, uh, perhaps Bajaj to be looking at, and Rajesh Exports. Right. Okay. So that's it for today. If there are any questions, then I would be happy to take them. Any questions? So the recording will be up hopefully by tomorrow morning, and the links will get sent out to all those who have subscribed. Done. So thank you all. Have a good night, and probably see you later this week for the next IMR. May not be on Friday. If it's not, then it'll be on Saturday. Right. Thank you, and have a great week ahead. Bye.